Good morning. Good morning. Hope you guys the 21st. Huge drop in the markets today, and that's kind of what the market has been the past really 3 weeks to a month now. Just a lot of volatility to both ways. Key levels that we had yesterday kind of rejected right off our key level. Really big drop towards the downside. And now we're at basically that news candle low. We'll kind of talk about the key levels coming into today. But really, yesterday, after that nice push towards the upside in the pre-market and in the after hours with Nvidia earnings that end up getting sold off. So it's good to kind of note that whenever the market has bullish news and we end up selling off, usually that's not as good of a sign, at least for short term. So the overall markets, we'll kind of talk about this here, of course. What's up, everyone? Good morning. Hope you guys are doing well. What's up, Victor? Non-Tolly. Good morning, Ryan, Norwin, Wayne. Good morning, Deuce, KO, Limit. What's up, everyone? Yeah, hope you guys are doing well. 50, I am. Cut, what's up, what's up? Yeah, what's up, everyone? Hope you guys are doing well. Let me grab some water here, and we will get started. Alrighty. So yeah, coming into today, we actually had a couple news events. We just had a news event recently. Some Fed members spoke on the market, talking about some rate cuts. So we're basically bouncing off of our key level support here on the higher time frames. We'll kind of talk about the key levels here in a second. But at least for our red folder news coming into today, we do have a little bit, which is going to be at 9:45. Flash services PMI, and then we have the revised consumer sentiment, which is at 10 a.m. Okay, let's go on to the major indices. Sorry, throat's a little dry this morning. But let's go on to the ES in the major indices, as you can see here. So coming into yesterday, right, the key levels that we had marked out was this key pivot high. So we mentioned, right, coming into yesterday, this was a very key level for the overall indices, especially if you want to potentially, right, gravitate back towards the highs, or we're going to essentially validate this right shoulder, reject off this level, and continue lower. And that's basically exactly what we did. So you can see we opened here, pushed all the way back up and towards this key high. Right off the bat, within the first really 2 hours, market slowly pushed higher, but ultimately stayed fairly heavy. And then we had a sudden drop all the way back towards the downside. Now, price is down at our main objective, right? We've wanted to see the markets really gravitate down and towards this level for a while now. Ultimately, we had a bunch of buyers step in, a bunch of fake outs, but now you can see we had that nice push, finally down in towards essentially this news candle low. So as you can see here for the ES along with the NQ and a bunch of the other indices, this is our major level here on the higher time frames. You can see it on the daily chart. You can see it on the 4-hour chart. Yesterday, really solid push towards the downside, right down in towards this key level, which is all the way back from almost over a month ago. This was from October the 12th. And this is when we had that huge sudden drop towards the downside this was, I think, 2 days, if I'm not mistaken. So this was that huge sudden drop that we had with news, and then we had that nice push towards the downside. This was the original tariffs. And now you can see now you can see the overall market dropping here as well. And now we're back down in towards this key level support. So coming into today here for the ES, you can see so far buyers are kind of stepping in off this level. We also have news here as well that's pushing the market a little bit towards the upside. Key level today is just going to be our 6,600 along with our 6,540. If you want to see some upside today, right, a potential kind of mean reversion after this big drop yesterday, right, with the kind of buyer stepping in, we want to see a reclaim back above. Now it's going to be the 6,600. So this is the reclaim setup that you'd be looking for back above your 6,600 for a potential mean reversion setup. If you want to see continuation lower, there's really only two scenarios here now. Either the rejection of your 6,600, or now it's going to be underneath now your 6,540. So these are the two scenarios for shorts. We already had such a big push lower. I'd personally like to see kind of the rejection off for 6,600, but that's going to be the key level here for the ES coming into market open. We'll see if we want to see some more downside, right? As I mentioned now, we're kind of right back into a key support level. So this is exactly where I'd like to see the buyer step in. If we break underneath here, then of course we can see some more downside, really like all the way back down and towards these daily lows that we have created. So for the overall market, at least moving forward, we'll have a more of a clear picture. We'll talk about this a little bit more this weekend, but at least for today, just keep an eye out on, as I mentioned, your 6,600 along with your 6,540 coming to market open. Let's go into the SPY chart. All right, as for the SPY chart, fairly similar thesis here. Yesterday, basically all the charts are looking exactly the same. We mentioned, right, if we want to see some upside, we have to break above this level and hold on the daily time frame, which would be key to invalidate this potential head and shoulders. Ultimately, we rejected off this level with a weak candle closure, and now we're confirming essentially this head and shoulders, and we're already back at our key level support, which in this case is our 652. So if you mark out the key levels, you can see touch here, multiple touches, and now we're just back at this key level support here after having this really big drop towards the downside. So coming into this morning, exact same game plan along with the ES key levels we can have marked out here now is just going to be our 657, which essentially is only your Tuesday's lows. So you can see we actually did a decent amount for this week, but ultimately we of course are bearish, but now we're in a key level support. So Monday, nice drop. Tuesday, end up dropping, buyers stepped in, push up on Wednesday, and then ultimately faded, gap up due to earnings and other news events, and then huge sell-off all the way towards the downside. Now, as I mentioned, in my opinion, the key level is just going to be your Tuesday's lows. So we mark this out. If we want to see continuation lower, reject off that Tuesday's lows, which is going to be this 656. If we reclaim this level, we could potentially just see a mean reversion back in between the middle of the range here, which would be back up and towards your 662. So this is the key level I have marked out, 656. As I mentioned, the game plan, reclaim back above, potential push up and towards your 662. If we ultimately reject off this area, we can see a push lower, or if we get underneath now, your previous day lows, 652, continuation lower here as well. So there's really only three scenarios today. You're either going to be looking for the pop and fade off your 656, get underneath your previous day lows, or if buyers want to step in, potential mean reversion above that 656 here. So these are the levels that I have on SPY coming into today. Now let's go into the QQQ chart. So Q chart here, fairly similar, showing a little bit more weakness, but you can see this kind of head and shoulders a little bit more clear. Higher time frame, key levels that we have marked out, exact level, same thing yesterday, right? We talked about we're not out of the blue just as of yet, right? We want to see kind of the break above really this higher time frame key level if we wanted to kind of confirm longs higher. But ultimately we opened up right at this key level, and then you can see solid rejection, at least on the higher time frames, now confirming this like right shoulder towards the downside. And you can see price, really solid day yesterday, right down in towards the key lows. Now technically we're back at a key level support, right, on the SPY and the Qs. As you can see for the QQQ, similar thing, just took out this news candle low, and we're kind of back at this general area. So for the SPY and Qs, at least coming to market open today, key levels that we have marked out. Key levels that we do have marked out is our 24,000. I kind of just readjusted this here, and then we also have your Tuesday's lows as well. So same game plan, really across the board on all these major tickers. What I'm going to have marked out is our Tuesday's lows of this week. If we do want to see some downside, right, there's really two scenarios. We can actually also mark out our previous day lows here as well, which in this case is closer to our 24,000. So for the NQ, I either want to see, right, pop and fade, off this 24,400. Potential break underneath your previous day lows hold for this push towards the downside. So there's really two potential short scenarios coming into today. You would like to see a pop and fade just because we already had such a big push lower yesterday, where you want to see that first pop be shorted for a continuation lower. The only way you're somewhat bullish here is you're looking for a V-shaped kind of recovery, and you want to see kind of this bounce off key levels of support. If you're looking for the reclaim, it's going to be the back above now your Tuesday's lows of this week. So you'd be looking for longs primarily above, this 24,400. So this is what we have here on the higher time frames. Of course, this is just intraday, but these are the key levels. We'll kind of have a more macro outlook, most likely on the weekend, just talking about what you can expect moving forward. But at least for intraday price action, these are the levels that we have. Let's go into the QQQ. So the Q's coming into today. The game plan, as I mentioned, exact same across the board. Higher time frames, kind of rejected off a very key pivot point, which is just your news candle high all the way back from October the 12th. You can see exact same rejection spot. So coming into today, key levels that we have marked out, it's going to be this 582. And of course, your Tuesday's lows here as well. So all the exact same levels across the board here for the QQQ and Q along with the ES. If you want to see downside, primarily underneath your Tuesday's lows. And now it's going to be underneath your previous day lows. Upside is going to be the reclaim back above your Tuesday's lows for any sort of pushback higher. So this is what we have for SPY Qs along with ES and NQ here now as well. Now let's go on to some tech names that we have coming into today. If you guys do have any charts, of course, you guys can drop them in the chat and I'll go over them after I go over some tech names here. Yeah, what's up, everyone? Hope you guys are doing well. If you guys do have any tech names or any names you'd like me to go over, you guys can drop them in the chat and I'll go over them in a bit. If you guys are enjoying this so far, I appreciate if you guys drop a like. Of course, if you guys haven't joined the daily watch list, that one is in the description below as well. If we have a bearish day, market structure breaks, sell the rips, not buy the dips. Yeah, in this case, the market's starting to flip. I talked about this really ever since we had this November the 12th. Now you can see the market's volatile. In these conditions, you can trade both sides, which is great. If you see the VIX elevated here now, I always talk about this. When the VIX is greater than 20, this is when you can make a lot of money just based off of the volatility, and there's just more opportunity. So when the VIX is greater than 20, you're just going to have a lot of intraday volatility to both sides because there's more uncertainty. So that's why I always mention having two theses coming to market open, because ultimately no one knows what's going to happen in the market. When there's less uncertainty, when we're underneath 20, usually the markets are rallying and we're just looking for trades towards the upside. But when the VIX is greater than 20, then there's volatility to both sides. And you can see whenever the VIX is high, which is just the volatility index or the greed and fear index, there's going to be big swings, Big swings lower, big swings higher, big swings lower. And that's really good for day trading. Not so good long term, not so good as for swing trades, but at least for day trading, this is like the best day trading conditions that you can ask for. All right, let's go on to a couple names here. So Tesla, really nice push towards the upside yesterday. Broke above your previous day highs, nice push up, really back up and towards your high from earlier this week, which just happened to be your Tuesday's highs. And then you can see really kind of sharp reaction. Once the market started flipping, a lot of these names pull back here as well. But based off the higher time frames, at least on the 4-hour, you can kind of see we're kind of rejecting off a similar spot where we did earlier into the week, which is just your 424. So as you can see right here, 424, and then we ended up having this rejection, and now we're just right back down inside of this range. So not too much to talk about here for Tesla. We actually haven't really done that much this week, kind of opening up at the same spot we did earlier on Monday. So key levels that we have marked out, 398. You can be looking for a potential bounce play off this level for a mean reversion back up in towards 412. If you want to see some downside now, underneath your 398, hold underneath for this continued push back towards the downside. So these are the two scenarios that we have for Tesla. As for Google, you can see this one's actually still holding up. Right, it recently hit our all-time highs yesterday once again, selling off, but of course, right, look at the daily chart on Google. This one very much still intact. It's pretty overextended here now, pretty big day here yesterday, but still getting bought up. So higher time frame key levels you're going to have marked out are the exact same levels we had for this week, right? A 294, you have your 299. Of course, it's going to be a lot harder to long today just based off of a price action for this week. But for Google, you like to see really maintain above your 294, or now the reclaim back above your 299 for continuation higher. Let's go into Nvidia. So Nvidia is the big one. This is the one that had earnings yesterday. Really solid push and actually sold off on day number 1. So this is the main ticker here. So we kind of talked about this being in a key spot yesterday. So higher time frames, really this 196 for me was very pivotal. We talked about it only being up 3%, right? There was a potential for an earnings reversal, which wasn't really in play at the start of the day, or even for me, after this huge gap up in the market, I didn't expect this to reverse on day number 1. I mentioned, right, after this huge gap up, I think we're up about like 2%. We're like, most likely, if it does want to fill the gap, it's probably not going to do it, right? Obviously, within the first 2 hours, it's going to do it either later into the day or the next day or the day after. But I actually end up filling the gap here on day number 1. And ultimately, that's when, right, Nvidia started dropping here as well. But key rejections that we had was really off your November 6 highs, which, as you can see, we had multiple touches. Also, the area that we broke down from originally the first time. And now you can see Nvidia is actually backing towards a higher time frame key level, which is finally this 178, just kind of back into a key level support here. And now you can see a little bit of buyers stepping in. So for the overall markets, a lot of these names are just, after this big sell-off day yesterday, are now right at a key level of support. I do think at least today, right, just based off where the SPY and Qs are at, it might be a tough short, right? A lot of people might be a little bit really aggressive just seeing a day like this. I wouldn't be surprised if we just form, right, some sort of inside bar day like we did back here, right? After this huge drop, we just had an inside bar day and consolidated, right? Similar thing kind of today. If we just get back above your Tuesday's highs within the first 5 to 10 minutes, then I would be a little bit more cautious trading today. If we have that sharp rejection right off the bat, then we can be looking for a continuation lower. But as for Nvidia, let's go back into this name so you can see right back in towards key levels of support, which in this case is your 176. And now we're bouncing back up here towards really this Thursday's lows of last week, and we already have multiple touches here as well. So this is your key level for Nvidia. We're just coming up back up in towards this 184. If you want to see upside, really reclaim back above your 184. If you want to see downside now, in my opinion, it's going to be a little bit more difficult, either the pop and fade off your 184, or now it's going to be now underneath your previous day lows, 180. All right, so that's what we have for Apple. Let's talk about AMD here. So AMD, this is one of, oh yeah, my bad. Let me actually change that here as well. Forgot I had that off. But yeah, as for AMD, key levels that we have marked out, really yesterday was this key level, 224. You can see there's really no support. After 224, really all the way down is towards your 204. But AMD, you can see, tried breaking lower here on Wednesday towards the downside. Of course, we had earnings. And then once we broke underneath once again that 224, which in this case is just your low that we created here on this is on Wednesday. Sorry, this was on Tuesday. All right, Tuesday's highs, Tuesday's lows was key. Once we broke underneath this level once again, huge spillage towards the downside. And now you can see we're actually all the way back down in towards that 202. Guys, we might look to fill the gap in the near future, but at least for now, currently, after this huge day, I want to see some consolidation here on NVDA, or I want to see the buyer step in. All right, as for the levels I have coming into today here for AMD, we have that 202 marked out, which is just your October the 6th lows that we have marked out. Other levels that we're going to have marked out here now as well are really just going to be pivot levels from yesterday. So we can just mark out these up close candles and drag them over. So this like general area 210, you can see just kind of consolidated in this general area, a couple out order blocks here as well. So this is going to be my key level coming to today here for AMD. If we reject, potential pop and fade is in play for a push towards the downside. Only way, I'm not really like, I wouldn't say this is long bias, right? If we reclaim back above, right, it would just be long intraday. But that doesn't mean you're long bias just based off of yesterday's price action. But if you want to go long for a potential quick scalp towards the upside, right, it's going to be back above your 212. Similar thing here with the overall market as well. If we just reclaim, we can see a push back up and towards even 598 is not out the picture. But that would just be long intraday, but of course higher time frame, leaning a little bit more towards the downside. So that's what we have basically on all the major indices, along with the tech names coming into today. All right, let's talk about Apple. So Apple really just kind of stuck inside a range. I actually ended up trading Apple yesterday. I really like the setup above your previous day highs. I thought we could get a nice move towards your all-time highs here, just because we've been stuck inside this range. Nice bounce off the lows. We got above your previous day highs. Really a lot of relative strength right off the bat. This was kind of on my radar for a potential push higher. Ultimately got that nice retest on the lower time frames, as you can see. Right, break above within the first minute. Nice retest. Hold above your previous day highs, continuation higher. I wanted to see your all-time highs. We ended up having a nice push on the premiums. Ultimately never got above your all-time highs. And then you can see kind of just right back down in towards the middle of the range. So coming into Apple now, yeah, don't really like it anymore. Just kind of consolidating this general area. So now we're at the low of the range. If you want to see any sort of trades, you either want to see a bounce, or now it's going to be underneath your 265 for a continuation lower. Apple, majority of the times when I do take a trade on Apple, it's usually a loser, just because there's no momentum. It's a lot slower of a mover. I actually lose more likely on Apple than I do win, just based off the ticker's personality. But as for Amazon, key levels that we have, 222 here. Not too much to talk about now. Bouncing off key levels of support. Nice reclaim once we broke back underneath, filled the gap towards the downside. At least for Amazon now. So a lot of these tickers are just pulling back. After now, the Qs is pulling back here as well. Amazon going to come back most likely towards that 212. That's your next higher time frame objective. Key level for Microsoft here, breaking underneath the level of support. You can see nice retest. Really, for Microsoft and a lot of these tickers, they could see your previous all-time highs. That's what I'd like to see, right? Kind of after rejecting or getting underneath this key level, your next level support really all the way back down in towards these old highs, right? 460, at least in the near future, right? Obviously, it's not going to drop to 460 today, but at least for Microsoft moving forward, the key level that you're just going to have marked out is going to be this 492. Support, turn into resistance for a continuation lower. Nice rejection yesterday. And then Meta still holding underneath this daily gap. Just a lot more consolidation, but staying heavy. You can see the tape has been a lot different the past couple of weeks here, just because the overall market's staying heavy, right? Every pop now has been shorted, right? Whereas previously, every dip has been bought up. In the past, ever since FOMC, this was a couple weeks ago, or sorry, this was at the start of October. Ever since we had FOMC, now the tape has been more bearish, right? After Palantir earnings, that was huge, right? Palantir was a major news factor on now why the market, at least for the AI in general, dropped towards the downside, right? We had Nvidia earnings yesterday, which is a big factor, and you can see the market dropping. Palantir earnings, which was a couple weeks ago, which kind of initially started this rally towards the downside. But now you can see, yeah, overall market staying heavy. The tape has been bearish, right? Higher time frame starting to flip a little bit here as well. But as I mentioned, be open to playing both sides. That's key, right? Don't have an overly biased. Don't be overly short. Don't be overly long during these conditions, right? That's why the VIX is where it's at, right? Whenever we have the VIX elevated, that's why the market moves the way it does, because a lot of people, they're either going to have a huge bias to the upside, huge bias towards the downside. But of course, if you're day trading, right, you don't want to have a crazy bias. You just want to be open and playing both sides. Okay, let's go on to a couple more tech names. Let me grab some water here. I'll go on some names for the next kind of like 5 to 10 minutes here. Let's see. If you guys do want to drop some tickers in the chat, I'll go over a little bit. Yeah, I'll go over some tickers for the next 5 to 10 minutes. All right. Yeah, I'll go over some tickers here now. If you guys want to drop some in the chat, Palantir drop here as well. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the daily watches, of course, you can join that as well in the description. But coming into today here, so a lot of these high beta names are dropping, right? Because now the market's starting to flip. This is, I'd say, the biggest drop we've had since earlier this year from February. So if you're looking at the overall markets, of course, this dropped a decent amount earlier into the year. But ever since really this bounce from April, we haven't had a significant drop. Right, we had a couple of drops in between, only down about 3 to 5%. But now this is kind of the biggest retracement that we've had since earlier this year, as I mentioned. But this is really good because, as I mentioned, right, whenever you have this big of a drop, it just provides volatility and liquidity into the market. So we can trade this up, we can trade this down. And of course, we're eventually going to trade it back towards our all-time highs. But at least for the overall market now, right, key levels. What I was about to say is Qs are only down about 8% off all-time highs. So with the markets only down about 8% off all-time highs, you can see a bunch of these high beta names are down a little bit more, right? Kind of 25% off highs on Palantir. Hood dropping a little bit more here now as well, down 30%. And a few other tickers are down a little bit more as well. And that's just expected, right? Just because they're high beta, and when the Qs moves higher, these are going to move a lot more. And the swings towards the downside are going to be more violent as well. So for the overall markets, at least now here on Palantir, key levels that we have marked out is going to be your 170. So 170 is key. We've been kind of just consolidating around this general area for a while now, at least for this week, consolidation. And then finally, once we had that drop with Nvidia, with the overall markets, this one's pushing nicely lower. At least if we look at this on the daily time frame, really the next levels I have for Palantir, 155, kind of have your 140 and 148. So those are the levels I have marked out. This was the original drop earlier in September. Now what I like to see is really kind of start showing a little bit more weaker price action and then kind of gravitate down and towards your 144, right? Higher time frame key level support here. So for at least Palantir coming into today, we'll kind of just mark out the levels today. Previous day lows, 155, and really the next level all the way back up and towards your 163. So for Palantir today, going to be a little bit of a trickier name, right? Pop and fade off your 163, which is fairly far away. I personally wouldn't really like to see this. I would just like to see consolidation. Break underneath your previous day lows, 155 for this push down in towards your pre-market lows and below. So previous day lows here is key for me on Palantir today. As for a few other tickers here, someone mentioned SoFi. Yeah, for SoFi, similar thing. A lot of these high beta names are going to be dropping with the overall market. Right, a couple of kind of upper wicks here. Earnings now, right, the sentiment shifting just a little bit. So these ones, of course, are going to pull back. If you look at the weekly chart, really your key level support, in my opinion, is right here, 25. What I don't want to see is a break underneath because we could very much well start dropping towards the downside, which is probably the more likely scenario. If we break this key level support, potential break and retest, and we're going to start heading lower. So that's what we have for SoFi. Those are the key levels that we have marked out. It's actually breaking here in the pre-market. Key levels now is going to just be your old lows. So level of support. Now you like to see for some downside if you're interested, rejection off for 25. If you want to see buyers step in, reclaim back above for this reversal back towards the upside. Okay. Let me just go over, let me go over Bitcoin here as well. So Bitcoin has been dropping. So for Bitcoin, we haven't talked about this chart in a while, but higher time frame, kind of break and retest that we had for 106 a couple weeks ago. Nice push lower here as well with the market sentiment, and now we're pushing a little bit lower. Now for Bitcoin, you can see pretty steep sell-off here. Weekly chart still building these higher lows, but ultimately for Bitcoin here now, I'd personally like to see it eventually come back down in towards your higher time frame break and retest level. Really the area that we broke out from originally is the area that I like to see Bitcoin now push lower. At least for intraday price action, just mark out up close candles, right? If you're on the hourly chart, right, mark out old kind of lows that you can use. And then these ones here as well, right, just mark out up close candles or order blocks. And these are going to be used as essentially resistance for continuation lower. So moving forward here, at least for Bitcoin, right, no up close candles. You kind of have this up close candle here on the daily time frame. So really what I like to see, at least moving forward, all pops kind of be shorted towards the downside. Okay, let me just go over my top watches coming into today, and then I'm going to get ready for market open. So at least the game plan coming to market open, as I mentioned, keep an eye out on your Tuesday's lows. That's going to be key here. If we show some strength within the first 5 minutes, right, be a little bit more patient today. We can see a nice mean reversion just based off the huge drop yesterday. We can see the markets kind of reverse back inside the mean. If we want to see shorts, which in my opinion, shorts are going to be very difficult, at least right off the bat, because we're right in towards a key level support, which we dropped from originally, right? This is kind of our main target. If buyers do want to step in, they're going to step in today and they're going to try and defend this level, right? So that's a very key, right? So shorts, a little bit more difficult. I think shorts would have been a lot nicer yesterday to trade it down in towards that 652. So key level today, Tuesday's lows, keep an eye on that. Qs, similar thing, Tuesday's lows, have this marked out. If you want to see upside, potential mean reversion. If you see the rejection, the rejection would be off your 590. All right, so my main watches coming into today here is really just primarily the spine cues themselves. So a lot of these ones are just kind of going down and towards your range low. They'd be more kind of mean reversion setups back towards the upside. So Tesla, we can keep an eye on that. Google still I don't really like the higher time frames as much, at least on the hourly chart, but reclaim back above your 294s in play. Nvidia, this one currently bouncing off your key level of support. As you can see, it's your 177. So for Nvidia, the play here today is your previous day low hold for a pushback towards the upside. So we'll keep an eye out on that. AMD, similar thing, right? Kind of bouncing off a key level of support, which is just your higher time frame gap. So we'd like to see kind of buyers step in for a potential mean reversion. For AMD, right, kind of reclaim back above your 210s in play. If it rejects, then we're just going to come right back down in towards that 202. Apple, not really interested in that. Rest of the names really not too interested here as well. Netflix actually potential more continuation lower. So Netflix breaking underneath a key level support, weak candle closure. We can see some more spillage here on Netflix. I actually do like this one. This is probably one of my favorite ones for a short. Key level previous day lows. Nice break underneath your 108. Now, what would you like to see here on Netflix? Previous day low retest, 105.50 for continuation lower. So Netflix looks good. Palantir looks good just based off the higher time frames. A couple of these other names look good here as well, but at least coming to market open today, be open and playing both sides as I mentioned. Just keep an eye out on your Tuesday's lows of this week on both the SPY and the Qs. During these markets, as I mentioned, don't have a bias, right? Don't stick to a bias because markets can flip easy, right? Whenever the markets give you, let's say, a huge push lower, also take profits. You can be up 100%, and then within the next 30 minutes, you can be down over 50% because that's how volatile the market is. So, right, make sure to understand the key levels, right? Don't have an overly bias. Just make sure you're not holding anything unless that's your plan is to hold. And yeah, that's about it. I'm going to get ready for market open here now. Hope you guys did enjoy that. If you did, appreciate if you guys drop a like. And if you guys haven't joined the watch list, that of course is in the description below. And yeah, hope you guys have a great rest of the day. Stay safe out there for Friday. If you guys already had a good week, right? Risk a small amount for Friday. If you're down for the week, right? Do not revenge trade, right? Light size on a Friday. No reason to try and make your money back on a day like today. But yeah, that's going to be it for me today. And I will see you guys all next week. All right. Have a great rest of the weekend, everyone. Take care. Bye bye.